When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon. First off, welcome. I have a feeling that you're going to either leave this session that we have and say to yourself, whoa, that makes a lot of sense. Like, a lot of that stuff is clicking, and you're going to start to become a little bit of a, um, an addict. You're going to start going through millions and millions of charts, which to me I think is a good thing. I think that level of practice is only going to expedite the process. Or you could be in the other part of this where you see it and you say, there's no way I'm ever going to get to this point. I'm done with this shit. I'm quitting, right? And I will say that it doesn't happen all that much, but if you do feel yourself kind of feeling a little overwhelmed, that is okay. With time, it's all going to come together. Tonight, we're just doing really basic brush strokes on some of the key concepts. I know I spoke to a few of you. You've already, watched some of the videos that I had made on them where they get much more in depth. To me, this is step one. This is really just entry level. Like, you're going to hear me say these words, at least kind of have somewhat of an idea as to what it is. There is a very regimented process here, and the beauty of it is each specific model that we're going to talk about, because realistically we have about four. You don't need to use all of them. You don't need to use any of them for that matter. You might find something in what I'm showing you here that resonates well with you and something that you can build off of and create your own thing, right? You really don't have to use any of mine, right? I know a lot of people in here do use the Mando model and the London kill zone specifically. A few use the odd NAM, which is, we'll get to it, but just basically the inverse of our Mando model as it is. And then last but not least, it's kind of the ICT unicorn. So it all comes together there. You guys can all hear me now? Eva, you good? Let's see, I just saw those messages. Um, yeah, I just want to make sure you guys can all hear, and then we'll get into it. Um, let me just make sure he's good before we roll on here. But um, but like I said, everything can really be segmented into whichever one of these concepts that really click with you, and you can kind of create your own thing. And now the beauty of this is whenever you do ultimately create your own model, it's not some, pardon me, not your bullshit moving averages that are going to change all the time. It's not something that you can't go back in time and back test. This is something that you will be able to back test every aspect of said model in order to create something that, one, you can prove is prove success with. Um, but in addition to that, it's something that you will have a lot of confidence in, and when you have confidence in something, odds are it's probably going to work out much better for you when you actually trust it, right? Because to me, there's three stages to this, and it's first, you kind of have to have a basic understanding of the concepts. This I don't think is going to take all of that long. I think by the end of tonight, you guys will, and this is only really going to be an hour. It's nothing too crazy, but by the end of it, I just a little bit of familiarity with it will definitely go a long way, because the next step really is to be able to start to see it. You start to see how price reacts to certain, whether it's an imbalance, whether it's an order block, whether it's a breaker. You see in certain market structures which imbalances would be more preferable in that situation. You look and see how price reacts to liquidity. Once you start to see those things in hindsight, that's a very good sign, because ultimately you're not going to be able to anticipate price and see it before it happens if you can't do it in the past, right? So again, it's brick by brick. It's a stepping stone. You don't want to rush too much into this. Get the concepts down. I'm going to show you, and hopefully by the end of tonight, you're going to say, oh, wow, I see how this works, right? That's the goal. And if that works for you, slowly but surely, with more practice, it's all going to come together. We've had hundreds and hundreds of success stories throughout time in here. With we have over 100 past demo accounts for funded trading where you now are, you don't have to risk your own capital to trade anymore. 100 people have gotten that, right, to this point. How many have kept it? We'll find that out shortly. But that's in itself a stepping stone to prove to you that what you are doing is working. How can you be more efficient so that you don't lose that account, right? Or even if you're trading options, right? Same type of situation. How can you get your model to a point where you are consistently making money and not giving it back immediately, right? That's the goal. So, to build off of those three, first you got to kind of have an understanding, then you see it, and then you can anticipate it. Those are really the 3 steps. And overall, you're going to hear me talk about 3 main concepts that ultimately come together to create my trading model, the Mando model. Okay. The first being imbalances, second being liquidity, and third being market structure. Right? All combined, that's where you get the Mando model. Okay. So let's just go back in time a little bit and we'll take a look. And first off, I'll start with imbalances. This is very important because the imbalance itself creates the entire makeup or trade plan associated with whatever we're looking at, right? Without the imbalance, for me, there's no entry, right? Without the imbalance, I don't know where I should be placing my stop loss so that I do not get smacked if it goes against me, right? Really, without the imbalance, there's no trade for me, right? And there's certain situations and certain times throughout the day where you're going to notice, oh, okay, I can see it setting up. It's coming down to that imbalance. It's not quite there. I need to wait, right? So it's even giving you that I guess that little bit of a compass in terms of like, okay, I need to wait. There's nothing here for me, right? And to me, defining that prior to anything is very, very important. So we'll use this previous example on NASDAQ, as the basis for our idea here. But we'll draw our range. We'll get to that in a second. But the idea behind the imbalance is it is a specific region on the chart, okay, where you have an imbalance in price in one direction while there's an inefficiency in the other direction. What do I mean by direction? Whether it's up buy side or down sell side, okay? So when we see, and this is simply put what it looks like, and again, you'll probably be able to do this in 10 minutes, right? You were to look at a specific candle, okay, any of these candles, and what you notice is that on either side of this candle right here, there are no wicks on either side of this up close candle, right? From this point here to this point here. That is an imbalance. There is an imbalance in price in that specific region. Why? Right? So, to use terms that I don't, really completely buy into these ideas, but there's an abundance of buyers and a lack of sellers in this specific region. There weren't even enough to get up into this specific region on the chart, and this range is from 381 to 144. Okay. Now the way that we look at this is inside this area, right? Think of a teeter-totter or a seesaw right at the park. You sit on one side of it, naturally the other side's up in the air. Okay. Now every time price gets back into that imbalance, it's like throwing a sandbag on the other side. So over time that area is going to be balanced. But one sandbag of 40 pounds and you're sitting on the other side 180 pounds, that's not balancing that range. So what we would anticipate is that when price hits that imbalance, right, we are going to hit it and take off. We don't really want to sit around in there too long. We want to get in and get out as soon as possible. Okay. So again, wick, body, wick. Okay. One more time. Wick, body, wick. Okay. Price gets into our imbalance. Price gets out of our imbalance. Okay. This is literally exactly what we want to see, right? We want to see price get in and price get out. Now, with that being said, that's a bullish imbalance. I'll show you what the bearish imbalance looks like very similarly. Here it is. So ready? Wick, body, wick. Okay, no wicks on either side. We would anticipate that when price gets into this imbalance, that price is going to get in and get out. Okay, here it is, ever so slightly. Let's zoom in here and look at this. Price gets in, price gets out. Okay, that's exactly the most ideal situation we have there. Now the beauty of this is, obviously, with more time you'll buy into it, right? But I can tell you, and if you take my word for it, this works. Price gets in and price gets out. There's a few little things that we'll get into as to, what imbalance is more likely to be successful versus lower probability. We'll get to that in a second. But the beauty of these imbalances are that when you have one mapped out and there's one that's, specifically catching your eye, not only do you have your entry mapped out, right? Ideally, you want a long in a bullish imbalance, right? You want a short inside a bearish imbalance, okay? But prior to the trade, everything can be mapped out here for you. Here's what I mean by that. You have your entry at some point inside of this imbalance. You can even say to yourself, I want to see us leave the imbalance before I enter. That's fine. If you're anticipating price to go up from that point, what's the problem with letting it show you get out of it? That's fine. You might be a little late. You might lose out on a couple points, but that's okay ultimately, right? As long as price is going where it's going and your entry is not, let's say, for example, up in this vicinity, right? We'll get to that in a second when we map ranges. But also, you have your stop loss just in case you're wrong. The low of the candle that creates that imbalance is always my stop loss on trades. Why? If I'm using this imbalance as a way for me to structure an idea, ultimately, if that low of the candle, if that candle is taken out, what is that telling me? That price inside this region is now balanced. And my idea to buy the imbalance in price, it's no longer valid. If price is balanced, then why am I still hanging on to a trade that's, it's balanced at this point. The price range is balanced. Price can move freely within that zone now because that candle has been voided, right? So it gives me a very sweet criteria as to where entry, exit, and even my take profit. That's going to be when we fall into the liquidity part of things, which we will get to. But simply put, you can go into the idea and say, okay, I want to buy this imbalance. My entry somewhere in the 10,845 range with a stop loss down here at 10,760. If that's too big for you, like there could be a situation where you have a pretty big range and it might not be something that you want to really, potentially be wrong on, right? Let's say it's $10, right? If you're looking at something like SPY, or maybe it's a $10 candle. That's too big for me. You don't need to trade it, right? It's all mapped out there for you. If that's something that makes sense, fantastic. If you're trading futures, you know exactly how much money you could potentially lose in that situation. 20 points for each point times however many points. That's your potential loss. And then multiply to where you think price is going to go times 20. There you go. You have your whole trade mapped out before you, right? So there's no more, oh shit, that loss was way bigger than I thought it was going to be, right? There's none of that. You don't have to worry about that anymore because it is all mapped out for you well in advance. And if it's too big, if it's too big of a risk, you could potentially lose more money than you would have liked to lose, then you don't have to take the trade, right? Go somewhere else. There's tons of names that you can look towards, right? Now with options, it's not going to be as simple, right? Because options, you have to deal with a couple other things, such as delta, gamma, theta, you name it. There's Greeks associated with those specific contracts that do influence the amount of money that you can make or lose in a certain situation, right? And if you don't really know all of those that well, that's fine. Just drop something in the comments right now. I'll take a look and I'll explain that a little bit more. But options contracts are a little bit different than what it would be like trading underlying stocks or futures, right? Where it's just cut and dry. I buy at 10, I sell at 11, I make $1 per. It's not necessarily the case with an options contract. You're dealing with a lot of other external factors, which we call the Greeks. But even still, right? Your delta is the probability that ultimately that contract ends up in the money, right? And if that's the case, where you're looking to see, okay, well, my delta is 60. That means and you'll see it on any options contract you ever buy. It's going to show you the delta, the gamma, the vega, and your theta, right? Every single one, it's going to show it. What the delta is telling you is if you have a 60 delta, that means for every $1 move that you have, $1 up, you're going to gain $60 per contract. If it goes down $1, you're going to lose $60 per contract. So you can essentially do the math on, let's say, for this, let's say it was a $4 loss and your delta is 60. 4 times 60 being 240. I know the max that I can lose in this is going to be $240. Plus you got to add in a little theta. We'll get to that later. But that's what you could potentially lose. So when I hear people, oh, I got in and it knifed on me and I got stuck in it, and that, to me, that's a lame excuse. You can have this whole thing mapped out prior. If it voids your plan, then why are you still trading it, right? You need to kind of become regimented in a way where you don't even think twice about it. If it takes out the low of the candle that created your imbalance, you were wrong. And if you can't become good at accepting being wrong, then this might not be the right business for you, because this is something where no matter what, you're going to be wrong. I don't care if you're the best trader in the world, you're going to lose, right? It's just a part of things. And honestly, the more and more that you look to press buttons, the higher the probability you're going to run into a couple losses are. But are you going to allow yourself to lose 10 winning trades of progress in one trade because you don't know how to pull the stop loss? You don't know how to take that loss. We've had it here, actually. We've had people who have gone on insane runs and they've totally blew it on a week of bad trades and not respecting a stop loss, right? Because you're all going to get to the point where you feel very confident that you can kind of identify where price is likely to go. It always comes down to that execution. And with time, your execution is only going to get better and better. But at first, you really have to start to embed it in your brain that this trade was mapped out prior. If I'm not following my plan, whose fault is this, right? A lot of it comes back to you, and a lot of people can't handle that. So that's why I'm just being very, candid about this and straightforward, because like I said, using these methods, you will have a trade mapped out for you. Are they always going to be correct? Probably not. More often than not, I think you'll be right, but probably not. And if that's the case, can you take losses? If you can't take losses, you're going to be in some trouble, because those losses that you don't take turn into massive losses when you don't know when to pull the trigger on something, right? So the risk management part of it, and you're going to hear me talk about this a lot over the next month, but I don't buy the trading psychology. I think it's important, but I think that it's secondary to actually having an understanding of how price works and how the market actually moves. If you don't have that, then of course you're not going to know, you're going to be sweating trades, right? Your psychology is going to be all fucked up because you don't have a specific game plan in play, right? You just haven't done it enough. Of course you're going to be sweating. You don't have confidence in it. You haven't built up that confidence in yourself to actually trust and respect the trade plan that you have mapped out for you, right? So that just all little secondary stuff that comes into play when this is just trading in general. But let's see. Yes. So the next concept, and also if you have any questions about uh, imbalances at all, uh, put them in the chat right now, and we'll hammer it home. These are very important, just how to map them. Okay. And you're going to hear, I tend to use the universal term imbalances, but there are two forms of imbalances that kind of fit into that one folder for me. And the first being the fair value gap, which I showed you guys here, right? A fair value gap, right? We have a buy side imbalance and an inefficiency to the sell side. And up here we have a sell side imbalance, buy side inefficiency, right? Buyers are inefficient in this area, creating that imbalance in price, ultimately pushing price lower, okay? But the second form is something that I'm sure all of you who've been around for a little bit have seen or heard of before, and that's simply just a gap, right? If you have a gap higher, we call that a bullish volume imbalance, right? A gap lower, a bearish volume imbalance, right? Just gaps, but those gaps, they actually carry a lot more weight than what you might have thought. When you see a gap on the chart, a lot of the times they can kind of indicate the market's next move, right? If you're seeing a gap down up in premium of a range, we're going to get to the premium and discount, don't worry. But if you see one in premium, that's going to show you some urgency to move lower. If you see a gap up in discount of a range, oftentimes that's going to show you some urgency to get up and get going, right? Just all little things that you can add in as well. I just heard the Discord beep. I want to make sure. Okay, good. Um, yeah, no, I'm glad a lot of people who've been here for a while coming in just for a little refresher. But so that's first, imbalances. So nobody commented, so I'm guessing you guys got it. All right. Of course, if you have questions, feel free. But that'll be kind of step one. Now, step two, we'll go back up to liquidity, right? So this is arguably the most important concept that we're going to talk about. And this is ultimately, to me, where price movement stems from. And liquidity, just another word that you can use to associate with, would be money, right? Liquidity. The algorithm, which I hope that you all buy into by now, and if you're new here, I hope you will buy into it pretty shortly. But and again, not just from me saying it, but from seeing it for yourself, that this algorithm that delivers price is driven by money or liquidity, right? Now, ultimately, the whole idea here is for that algorithm to go chase liquidity. It's going to go to a liquidity target. And, you might be thinking, where the hell am I going to find that? This, to be honest, it's really not the most difficult thing, really. We're looking at key swing highs and swing lows, okay, as pools of liquidity, areas in which the market could likely go to, okay? Now, there's ultimately, and this is really the secret sauce behind trading, in my opinion, I think this is probably the biggest game changer for anybody, really. You can have a bozo using moving averages and trend lines, but if he has an understanding of the concept of liquidity, I think he'll probably do all right. But if we can get an idea as to where price is going based on our pools of liquidity, right, which you can, and I'll explain that next, that's market structure. But if you can get an idea of where price is going, that doesn't necessarily mean I need to buy this and hold it until we get up to buy side liquidity, right? Because there's a few red candles mixed in. You might want to take some profits. But if you're on the right side of this thing for the entirety of this range from discount to liquidity, buy side liquidity, which would be a swing high, sell side liquidity being a swing low, that's a lot of points that you're going to be on the right side of things for, right? This in itself is, 6,000 points. Do the math. 6,000 points times $20 per point. So that could be a lot of money. And again, you don't have to catch every single one of those points, but if you can catch a majority or a nice chunk of those, it's a pretty good feeling. That's a good amount of money that you can make, right? Now, how do we know which pool of liquidity the market is going to target? Is there a way for us to feel really good about it, right? And if you're here, you've probably seen me post stuff on Twitter, and when I post stuff on Twitter, the only way I'm posting on Twitter is if I feel really good about it happening, right? I don't want to be throwing out losers left and right, right? So, that component of it has actually helped me become better, because now if it's not clear as day, or I feel like it's clear as day, I'm not going to post it, because I don't want to have a bunch of clunkers and for idiots to attack me all over the place, right? Unless it's really high quality, I'm not really going to put it out there. But how do we identify which pool of liquidity we're likely to target? Well, we have something called market structure, or our trend, right? You've probably heard that word before. But how do we identify a trend, right? I'm not talking about using that line that people just do this and they try and use it to fit their narrative. That's the best, right? They just try and maneuver these like triangles all over the place to make it make sense, when it's just a load of shit. There's nothing to it, really. But how do we know in a way that we can backtest and prove it that this is something that actually works? Okay. So ultimately, all that we're looking for, and I'm going to use, we can go back to, let's do it on the weekly, actually. This way there's a little bit more humps and lows in on a weekly time frame versus a monthly, which is really kind of pure, and price movement is pretty smooth. But let's take a look, okay? So I think it's fair at this point to say that, let's go back here, whoops. We took out this high, right? And this goes for any high or low. We could do this anywhere. I know we're going back to 2018, but I just want to show you the repetition over the last couple years. It's fair to say that we took out this high with what price run? Okay. From our this low, swing low, to swing high. Fair? I think I would say that's a fair assessment, right? So we're looking for highs and lows to be taken out. If we take out a high, we are looking at a bullish trend. If we take out a swing low, we are looking at a bearish trend. And we're always going to be pivoting towards the higher time frame. The higher time frame, the stronger the setup is going to be, right? So if we have what would have been technically a bearish structure on a daily time frame, but our weekly, that's getting us down into discount, I'm going to pivot towards my higher time frame. My higher time frame is going to know all. We had this, something similar to this happen a couple months ago, where we had a weekly imbalance, bearish imbalance form on Nasdaq. But then you look into the monthly time frame and you see that weekly imbalance literally just brought us into a monthly bullish imbalance, and we took flight from there, right? So I'm always deferring to what I see on a higher time frame. And how we analyze this and really come to conclusions is something that I think it's going to be beyond one night. I don't want to overload anybody, but at this point, my model, the Mando model, where it all comes together using the ideas of imbalances, liquidity, and market structure, is as follows. After we take out a swing high or swing low, I'm going to map the range that does so. Okay, so this is the price run that took out that high, correct? Okay. Now from this point, you're going to notice that price does not hit this 50%. What that tells me is our range is not set. Why? Our range won't set until we get an opportunity at equilibrium or fair value for whatever the asset is. Okay, if we do not get to that 50%, there's really no interest to me, because to me, fair value of a range or of whatever we're talking about, Nasdaq in this instance, is right in the middle of our high and our low. That is equilibrium, right down the pipe. Now, from this point, the way that I look at this specific range is anything above 50% is premium. I am overpaying for it above 50%. If it's below 50% in a bullish range, this is discounted, right? It is below fair value or equilibrium, right? So let's just pretend this is milk, and milk is $5, okay? $5, or generally $5. That's equilibrium. That's the midpoint value. Now, if you go to a place and you see, $7 for milk, you're probably, if it's a necessity and you need it, you might have to overpay for it, and that sucks, because you could have went down the street and got it for $2 less, right? But if you see something that's discounted or on sale, you're probably more likely to buy that because it's discounted from its original value, its fair value. So if I don't get 50% on a retracement like so, all that tells me is that the range is not set. Okay? So from this point, you're going to look again, and you're going to notice that, again, we didn't get discount. Damn, man, I'm missing out on all this opportunity. Just wait. Here we go. Right up to the high prior to COVID. Okay? So you guys probably all know about the COVID crash, right? Quote unquote crash. That's what I call it. What is the COVID crash to me? Well, to me, this just looks like a discount retracement into, we have a couple, hold on, right here. There's one, and here's your second. This is what we would refer to as an inverse. Okay, ready? Discount retracement into a bullish imbalance. Hold on, where's this red one? Come on, give it to me. There it is. Prior to your run for highs, okay? So, Mando, you were just talking to me about which pool of liquidity that we can target, what was that all about? When you have a bullish trend, when you've taken out a high and you've seen 50% of a specific price range, go back and backtest this. Tell me how many times price gets into a discount bullish imbalance and takes off for buy side liquidity. Just go check in the Mando model folder. You guys are all in the group. There's a zillion examples. This is the market. This is how price action works. I, Look, just because it's what I use, don't don't take it out of context. Do it yourself, and you're gonna start to see, holy shit. Okay, got it. Now watch this. After you get your discount retracement into a bullish imbalance for your run to highs to complete my model, what is one thing that is noteworthy inside the entirety of this? And, this is a broad question, so I'll give you the answer. If we're entering down here in discount, what's really our risk in this trade? Way less than 50% of our range to make way more than 50% of our range. If we're buying 79, right, it's lining up with 79%. We're not using Fibonacci. It's all just for measurement. But if we have an imbalance that down here, this is probably like 81, 82. We're scoring 82% of the range while only risking 18. Does that make sense to you? That makes sense to me. My reward is always way more than what my risk is going to be. And this is why this model, when I first got it put together and started to like make sense of it, why it makes sense to me is because this is something that happens over and over and over again. And on top of that, if my reward is always going to outweigh my risk by a lot, that makes me feel pretty good, right? That makes me feel okay. I can stop out 2 or 3 times. If I hit once, guess what? I erase those stop outs and still make money. That's the goal here, to really, and you might hear some people say, oh, the risk reward doesn't make sense if you know where price is going. Sure, but guess what? When people are just starting to learn how to do this, to have a better risk, have a better reward for your risk, to me makes a whole lot of sense, right? So as we continue, we're almost done, I promise. Here's your low. Okay, what was the price run that took out our previous swing high pool of liquidity? Right here, and you see I have it labeled. What was that price run? Go through go to every single red candle or black candle. Ask yourself, do we see 50%? No. Okay, that's fine. Range is not set. Go to each red candle. Do we see 50%? Nope, we don't. What is that telling me? The range is not set. The range is not set. The range is not set. Aha! Got it. Low to our high. We now have an established range. This is something that I'll teach you guys after. I don't want to overload you, but when you see the first bearish imbalance happen, oftentimes that's telling you discount is coming. Okay? But from this point, you have a bullish trend. I think that's fair for everybody to say. We took out this high with that price run. Okay? We are now in discount of that bullish range. Okay? So with that, what can we look for? We can look for some sort of imbalance to be taking place in here. And I might just add that with where we currently sit on these NASDAQ contracts, they are adjusted over time, 3 or 4 times a year. Okay, so these levels might not be absolutely precise, but if you were to type in at Mando Trading within, I don't know, October 2022 in that tweet, you're going to see that we're going to have some sort of imbalance lining up. In this case, we have something called an order block, and this is for another time. But this is another form of an imbalance. It's for another time. Don't worry about this. You really don't even need to know about order blocks if you don't want to. But price gets down into this bullish imbalance down here in discount of your overarching bullish trend or bullish range. Okay. Now from this point, which pool of liquidity is more likely to happen? You can just refer back to, is our trend bullish or is our trend bearish? If our trend is bullish, where are we looking? Upper highs. Remember that bear market of 2022? Yeah. I just call it a discount retracement into a bullish imbalance. That's all. All it is. Just took a little bit more time than COVID did, but guess what? Same result. Price just gravitates towards discount, specifically an imbalance, ultimately running for our buy side liquidity target, which is our previous swing high. That's all it is, folks. Ready? I got another one for you. Okay. So, following our first shift in structure here. Okay. You guys remember that bank crisis that we had with Silicon Valley and all of that nonsense, right? You guys remember that? Well, what happened after taking out this high? What's our range that we can map out from our low to our high? Fair? We took out this high with that price run. Okay. What do you notice here? What's in discount of this bullish range, right? When the bank started to blow up. No, we're just getting into discount bullish imbalance. Do you see why I don't give a shit about news? It doesn't matter to me whatsoever. Price is algorithmically delivered in a way in which it's something that is repeatable regardless of the news. I don't care. I'll go to any chart. I'll go to Tesla. I'll go to Apple. I'll go to Boeing from 1970. It doesn't matter. I don't have the earnings reports from back then. I don't know if they had wings flying, blowing off the planes back then too, right? I don't know any of that shit. But price delivers this way since the beginning of time. We can go back to Boeing if you guys want to do that. I have a whole video of that going back to Boeing. We did FedEx, or maybe it was UPS. I forget one of those. Going back 40 years. These concepts still work. All right. Now here's your low to your high. Here's your discount, bullish imbalance. So right when we hit 50%, what is the more likely draw on liquidity? You're going to hear us all talking about that in this group. Draw on liquidity. That is the target, basically. Where do we think price is likely to go? Well, we have a bullish trend. We got our discount retracement. We got into a bullish imbalance. Ultimately, we're looking for highs here, right? We're looking for a continuation. And there it is. Bingo. Run for highs, okay? Now the same thing applies. We took out this high with what price run? From your low to your high. No discount retracement. That's okay. What is that telling us? The range isn't set. Don't worry. We'll get an opportunity. I feel good about that, okay? From your low to your high. Here is your discount retracement. Do we have a bullish imbalance? Sure do. There's your run for highs, right? Once we get to 50% and this range is set, where is price likely to go to? Our buy side draw or our sell side draw? Are we bullish or are we bearish? Well, we're bullish. We took out this high here with that price run. We're looking for this high. Guess what? Low, up and through. Mando model is complete. Okay. Now, how about this one? What we're about to complete here, and I fully anticipate this happening over the next couple, hopefully sooner, but probably over the next couple of weeks. What was the price run that took out this high right here? From your low, your previous discount retracement into a bullish imbalance, to your, go to each red candle, you're going to notice that our range was not set. Even after here, our range wasn't set, right? 50% we need. That's okay. Discount retracement below 50%, check. Bullish imbalance, check. Let me remove this. It's a previous bearish imbalance. We'll get to that another time also. Price gets into discount, bullish imbalance. We sweep liquidity. Is this our range setter? Nope. Low to high. Here's your discount retracement. We sweep liquidity, gather money. This is something called turtle soup. Again, for another time, I don't want to throw too much at you, but this is a layup. Run for highs. That's the expectation, and that's going to complete the Mando model yet again. And that's it. That is the Mando model. Imbalances, identifying liquidity, understanding current market structure. That's really it. That's my model right there in a nutshell. Now, you're just showing me NASDAQ. What do you want to look at? We'll look at anything. You want to look at Apple? Sure, we can look at Apple. Do you want to look at Tesla? Go ahead. Let's go. Go through 100 names. Don't matter. Ready? We'll see an immediate one right here. Low to your high, discount retracement, 50%. Bullish imbalance, right here. Run for, oh, not yet. It's coming. Ready? Here's another one. Low to your high. We took out this high right here with that price run. We didn't get discount. That's fine. Did we get it over here? Not quite. Okay. Big range. Wait, one more time. Whoops. There it is. Okay. There she blows. There she goes. Next. What's the next one you guys want to look at? We'll look at Microsoft. We'll go through all of them. Don't matter. Ready? Same situation here. From your low to your high. Here's your discount retracement into a bullish imbalance. There's your run for highs. Mando model complete. Why are we targeting this high? Our trend is bullish. We got into a discount bullish imbalance. Buy side, here we come. Okay, next up, low to your, whoops. Go through each red candle. Let's see if we get discounted. Nope. Okay, that's fine. Let's see. Did we hit it there? No. Nope. 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 No discount retracements. That's okay. We can look towards our daily range. That's what I currently have mapped. Right? If we go to the daily, it's going to be much more clear. Ready? So if you're not in discount on a monthly time frame, that's okay. You can look at something like Meta. That takes 11 years to complete a discount retracement on a monthly time frame. But go over to your daily time frame. Clear as day. From your low, whoops, to your high. Here's your discount retracement. Here's your bullish imbalance. Here's your turtle soup. That's just an added layer. You don't need it, but there it is. So far, so good. Where's our buy side target for Microsoft? 468.35. Right? Let's go to Netflix. Okay, where are we? Go through each one of these little price fluctuations. Okay, and you can go through every time we've taken out a high. What happens? Okay, we took out this high with what price run? Low to high. Bullish imbalance. Run for highs. Mando model complete. We took out this high right here with what price run? Low to high. Discount retracement. Bullish imbalance. Run for highs. Mando model complete. Low to your high. Discount retracement. Bullish imbalance. That's a gap up. Volume imbalance, right? We talked about that. Run for highs. Mando model complete. Low to your high. Discount retracement. Bullish imbalance. Run for highs. What's next? Go on forever. Low. This is what we're currently working with on our range on the weekly. Any more? We can go through any. Does it work on crypto? Sure. Low, high, discount retracement, bullish imbalance, run for highs. Low, high, discount retracement, bullish imbalance, run for highs. Low, high, whoops, discount retracement, bullish imbalance, run for highs. Starting to see it. Come on, tell me you're starting to see it. Nice. Great. Integrity. Yeah, I knew you were newer here, so I wanted to make sure of that. What do you think, guys? What do you think? And what do you think, Ibra? What do you think, Flow Hunter? What do you think, Greg? And the rest of you guys have been here. Joe, what about you? What are you guys thinking? Repeatable. You sure you want to see it on GME? I don't want to show it, but I will. Fuck. What do you see? What was the price run to take out all of these all-time highs previously? Low to your high. Look what we got on GME right now. Folks. One big Mando model. Deep discount, bullish imbalance. Low, high, discount retracement. It's a matter of time, unfortunately. That's all it is. That's a great question. Let me read out the rest of the comments, and Gash, I'll get to yours. That's a great question. See, it seems like an easy way to trade. Yep, the way ultimately it's something that maps out the entirety of your trade. Therefore, if you are wrong, you're stopping out for minimal losses. If it's not going to be a minimal loss, then why are you taking the trade? It's too big for you. You know that before you even enter the trade. Why would you take it if you think it's too big for you, right? That's the beauty of it. You have an idea of where the target is. It's going to completely outweigh the potential loss that you're going to take. And if it doesn't, then why are you taking the trade? It's mapped out before. You know what it could possibly be before the trade. There's no getting caught with your pants down in this. It's always mapped out. Beautiful with this simplicity. No favorite indicators, no mess of a chart. Starting to better understand the price delivery helps you really establish a plan. Yep, absolutely. You don't need any indicators. Anybody who tells you that you do, they're full of shit. It's to me, that is much more distracting than anything else. The news, what you see on CNBC, what you see from 99% of these idiots on Twitter, it's all bullshit. You don't need any of it. If you learn how to read price and you can see that this is something that is extremely repeatable, and remember, we have 4 of these. This is just one. This is something that you can feast off of, and that's all it takes. One setup. You don't need to trade the same exact thing. You don't need to, stress yourself out. If it's not there, you're gonna finally believe that, okay, I don't need to trade because I know the next time I get it, I'm gonna hammer it and I'm gonna set myself up for a couple weeks, right? Yep, new indicators are time and price. That's it. The time aspect of it is something that is very important that we will get to at some point. But again, I don't want to overload anybody right now. This is great. This is a great question. Once the model is complete, do you go to the next swing low to swing high? Absolutely. Okay? And this is, Gaj, where the inverse Mando model, and we've kind of dubbed it the odd nam, comes into play. Okay? So let me see if I could cherry pick an example here. Let's see. We haven't had many of them because we've been bullish for so long. Actually, let's just go back to NASDAQ. We'll go back to the quote-unquote bear market. Okay? So at what point do we really know when this range is done? Did we reach all buy side or liquidity swing high targets? Yeah, if we did, then guess what? Anything above all-time highs, I got nothing for you. We've never been up there. There's no money resting up there for the algorithm to go and get. I have no idea when big money is going to start to sell off, right? That's as candid and to me as simple as I can possibly put it. I have no idea when this thing is going to stop on NASDAQ. Could we go to 25? Sure. Where are you getting that number? I don't know. I'm guessing. That's literally what it is. Anybody telling you that we're going to 600 SPY is just, yeah, I think that's where it's going. I think. There's no fabric behind that. We've never been there. There's no reason for the algorithm to drive to that point. We can use that as a specific target yet. We don't know when big money's going to pull their money off the table. When they tell us it's time, it's time. Okay? And how do we know it's time for us to go see discount? Bearish imbalance. Every single time that we've gone and seen discount in any of these price runs, back test it yourself. Go look on any chart you want. Anytime we're about to go down to discount of the range, what do we see? Bearish imbalance. Okay. What do we see? Before we got down into discount right here. Okay, we got down into discount in August. Bearish imbalance. Every time. Every time we see discount, there's going to be a bearish imbalance. Bearish imbalance. Bearish imbalance. Look how price reacts to it. There it is. There was a few here, but our range was so quote unquote extended at this time. From 2020 to 2021, end of 21. And we ranged that range from 8,000 to 18. That's 10,000 points before you got any sign of retracement. Bearish imbalance kind of sold it to you, right? But that is essentially the odd nam. When you see that bearish imbalance, you could look to play a retracement back into it and then ultimately look for discount. Not as big of a risk reward type win as what you can get with the Mando model, but still, so you're not sitting on your hands waiting for price to retrace down here, because this took a while. This bear market, quote unquote bear market, November down to, it was about a year of us steadily declining prior to getting to discount, right? Do you want to just sit here and wait a year before pressing another trade? Probably not. But it's just another thing that you can add to your toolbox as a way to identify a downside trade. That's the odd nam model. That's another thing that we're going to get to in much more detail as we continue on here over the next couple months. If you look at our third, again, I'm just going to briefly go over these. Our London kill zone model, that's much more futures or index based. It's not so much the individual names, but it's something that you can use to look for a quick hit in the morning, right? It doesn't even have to be the morning, but it's a quick hit based on the London range that you're seeing in your futures data. That's another one that we can use. And the last being that unicorn model, which that one's going to be a little bit more confusing right now, so I'm not going to explain it because I didn't teach you guys anything about breakers yet, but that's coming. And those are the most powerful, in my opinion, the most powerful type of imbalance that we can really look towards. They don't always occur, but when they do, they bang. So let me come back over here and make sure. Everything else will mess you up once you learn time and price. Yeah, it's true. And I always say this, just to be fair, you know, just because you're here doesn't mean that you have to trade like any of us. You don't have to do that, you know. But if I can show you one thing that you can add into an existing model that separates you, that's fantastic. That's a win. But you'll notice that all of those people who come in here with their own model that trade off of whatever it is, moving averages, you know, trend lines, whatever, when they, you know, been here for a little bit, you'll notice that slowly but surely each one of those indicators start to fall off until your chart's looking like this with nothing. The two I have are time-based. New week open gap, something we'll get to, and then just it maps specific times on the chart that when I click that on, it'll show me the 9:30 open. Again, that's the time aspect of it. We will get to that. But in terms of overall price delivery, can't get much more simple than this. This is something that is repeatable. It's something you can go back on any chart and do this on. Just got to give it a little bit of time, a little bit of practice, and the more time and practice you put in, all that's going to do is expedite the process for you to feel good about doing this for yourself. And when you do, start to reap the benefits. LKZ, yeah. Let's see. Mostly we all trade differently off the same concepts. Yep, basically, right. And that's the beauty of it, because there's a lot of things that fall under this umbrella of like reading price, right? There's totally a lot of stuff. But at the end of the day, like I said, I led the whole thing off with this. You don't have to trade like me. You don't have to trade like KD. You don't have to trade like Sean. You don't have to trade like Ryan. You don't have to trade like Seeker. Go down the list. Cajun, you know, Kyle, breaker model, right? Snaz, you all have different models, right? Now with that, what's the key takeaway to all of this? There might be one thing that sticks out to you. You might have heard me just talk about premium versus discount. That might be all you need. When we get into breakers, that's a big one because a lot of people have literally just built their model off of breakers. I know Kyle trades off breakers quite a bit. That's I don't know if it's exclusively his thing. Yeah, no, Ibra, you're right. We all trade ICT, but there's just so many different ways to go about it. And really, for me, it took me a while to settle in, use one, which is my Mando model, right? But beyond that, I started to say, okay, well, I see that price loves to come to discount. There's got to be a way for me to identify this and capitalize on that discount retracement so I can play it both ways. And then I, through back testing, this one didn't take as long because it's something as simple as an imbalance showing you that price wants to go to discount. Then that's where the odd NAM or the inverse model came from. The kill zone is a time aspect, and that one's really smooth too. Take out a higher low of that London kill zone, look for the opposite side following an imbalance formation. Smooth, nothing too crazy. And then the unicorn needs to know what the breakers are, which we'll get to. That's just a patented setup. It's visual, but we will get to that. I don't want to throw it all at you at once, but you won't be a poor. You go 2 weeks of working normal times, and you go 2 weeks off where you're working overnight and stuff, and then you try to trade the overnight, and it's not always great. But anyways, that is all I have. So for anybody in here who has any questions based on anything that we talked about tonight, feel free to send it over. I'll happy to answer any of your questions. And to me, I take pride in being able to answer the questions that are asked. When you ask somebody a question and they don't know what the hell they're talking about, they don't even address the question. I'll always address your question because I feel like with my model, I know all the ins and outs. Everything that you could possibly ask me about it, I feel confident to give you an example and an explanation as to why something would work, why something would not work. All right. So this is a lot of hours at work. What I just showed you there, I wish it was an hour long when I was putting it together, but that takes a lot of time. Snaz, I have it recorded. Don't worry. I'll put it on YouTube and I'll send it. But that's all I got. So again, if you have any questions about anything here, if you're struggling, if you're 3 weeks in and you're like, shoot, man, I got to figure this out. I'm falling behind a little bit. Just shoot me a message. We'll get it sorted out. Don't stress it. And don't be so eager to push buttons. If it takes you a little bit of time before you feel good about it, that's probably going to save you some stop out money along the way. Just take your time, learn the concepts, and when you learn the concepts, you're going to see how trading becomes fun. But that's all I got. So yeah, they're coming. Our lives like these are coming back October 1. So I just want to get some of the newer people here to get in the mix a little bit, just have somewhat of an idea, just so when we do start rolling, they're not completely behind. So, but all right, I'll catch everybody later on. See you. ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon. Okay, what's going on, everybody? Welcome back to another weekly prep. This week we have a lot to talk about. Unless you're living under a rock, you know everything that's going on and all that good stuff. Or actually, it's pretty bad stuff, I should say. So we'll get to all of that. We'll talk about this week's economic data. Talk about everything that we would typically talk about, whether that's the index overview, whether that's some individual names from the ex subscribers and from the chat. Any questions like that, of course, as they come up, feel free to use the chat. We will get to those as well. But I have to address something first because this drives me absolutely crazy. Okay. So while the stream is loading up, right? So if you just like kind of cold start a stream and you jump right in, then usually there's people straggling. Then there's people who are asking you 50,000 questions that you've already just went over on the chart or something like that. So what I do is I put one of my old videos into a, like a loading screen. So it loads for an hour. That way, look, you get, if you want it, you can have it. If you do not like that there's a video in the loading screen, please, I beg you, please stop watching me. Please, okay? I leave it there. It's all it is just extra information. It says in the top left, stream starts at 8:30. Here's a one of the videos from our old mentorship. Here you go. If you don't like it, please, you do not have to watch it. Okay. I just have that there. So that way the stream is booted. People join the stream early so that when I start the opening little monologue, I don't have to go back 50,000 times because I know it. Tonight it's going to happen. Somebody's going to come in towards the end and they're going to request me to talk about ES or SPY or NASDAQ or something like that. And that's the first thing that we go over here, right? So by me opening up the stream early, give some time, for people to file in. Again, there's an old video there. If you want to watch the old video, great. If not, just come at 8:30, okay? But I have it there so it kind of loads into the stream. Right, people can kind of come in that way if they want to catch some, extra content, go for it. But, it's like I feel like, a broken record here. I think this is like the third time that I've talked about it, but I just have the video there for loading up purposes. If anybody, do you want me just to play elevator music for an hour? I could do that too, but that has been driving me absolutely crazy. I'm giving you the secrets to the universe here, and I've gotten like four people complaining about, oh, I don't like that, it's so small. Don't watch it. Or if you're on X, zoom in. Okay, you can use your fingers to zoom in, and it'll stay there. All right. So I had to get that off my chest. Sorry, that was really a nice start to the stream. I'm good job, but anyways, we got more important stuff to talk about than this. So let's just get on with this. Okay. Now let me just share up the screen and we'll get rolling. So here's I guess the second thing now. So this is important. And I feel the need to bring this up with my own little twist here. Okay. So obviously with the news of everything that's going on in, the Middle East and such, right? I know, for the most part, people probably, are just looking at it from, a lens of finance, how it's going to affect their positions, how they're going to trade this moving forward. So be it. I'm not here. I'm not here to judge anybody. I don't care. But the thing is, while obviously you have to bring that up, right? You have to bring up that there's a pretty big event going on in the Middle East. But the thing is, I have opinions. I'm sure you have opinions, but I know you guys don't follow me for political conversations and stuff like that. So I'm really not going to talk about it like that. I could just sit here and shove it down your throat, my viewpoint, but I'm not going to do that because I hate when other people do that to me. So we're not going to talk about it in depth like that. If that's something you guys want down the road, I'll create a political channel. But for right now, we'll just talk about a pretty dramatic event that just happened over the weekend. And with that being said, we were down a little bit more at open. We were climbing back just a little bit. Let me just zoom in a little bit more. Yeah, so we did end up gapping down to start this weekly candle. So we have a new week open gap that we are currently trading inside of at the moment. That new week open gap actually overlays a previous imbalance from, wow, last week's new week open gap. Go figure. Okay. So we do have a real cluster sandwich right now with two back-to-back new week open gaps right in the middle. Okay. So what am I anticipating as a result of everything that's going on right now? Again, as you guys know, I news, external things, they're not really things that I take into too much consideration, as I believe that the answers that are necessary for you to make, good decisions is already currently present on the chart, right? But with these types of events, right, with any economic data that comes in before the market opens, right, we have red folder data all the time that usually occurs at around 8:30 a.m. Eastern. When that stuff happens, to me, I can look towards that as a, kind of a volatility event, right? Something that will up the VIX, something that's going to increase volatility, aka the amount that price is going to move and the speed in which it's going to happen. Okay. So I just want to take that into consideration as we continue on and as we move forward throughout this week. But, there's going to be a couple key things that we're kind of just circling back on from last week, okay? Because a lot of the things that we talked about last week are still in play into this week, okay? Last week was really kind of a nothing burger, really, if you look at it. So here, okay? Pretty much a nothing burger, okay? But I think it is important to note that there is only 1 week left inside of this monthly candle. We talked about this last week. I'm going to reiterate it again, okay? As long as this weekly candle doesn't come back down and touch, what's the high of this candle here? 20,044. We will actually create a monthly bullish imbalance for the month of June, okay? That is very encouraging for the bulls moving forward, okay? We haven't created a monthly imbalance on a NASDAQ since, dating back all the way to January of 2024. So it's been a really long time since we've had a move like this, okay? But again, not set in stone, still 7 days. Crazier things have happened in the past, but 1,600 points in a week, 1,700 points in a week seems pretty unlikely moving forward. Okay, so as we continue on, we'll go down to our weekly time frame. And like we talked about last week, again, this is just another echo point from last week. Now, really, nothing is suggesting that we need to really, retrace or anything like that, or, kind of head down lower. But I will say that if there were to be a place for that to happen, this is really the last chance for the bears, in my opinion. Okay. So inside of this weekly bearish imbalance, this is also a showtime imbalance. I may have removed my little showtime writing on here, but it should right here. Let me get it. Okay. So what does showtime mean? So if you're new here, first off, welcome. Sorry I yelled at everybody in the beginning, but sometimes it's got to be done. But anyways, yeah. So if you're new to this and you're notice like this term showtime, what does that mean, right? So oftentimes you'll see showtime on my chart. What that is indicating is that is essentially the last chance for whatever directional animal it is, right? We talk about bulls and bears. This to me would be the last chance for the bears in this given situation, due to the fact that it is the final bearish imbalance inside of this bearish price run that we had from the beginning of February down to April lows. Okay, so this is really last chance. Now you might now be thinking, okay, well, he said if there were to be some sort of retracement, this is the time, but like, why wouldn't it just retrace from here? And this is where even smaller time frames come into play. So I'm going to show you the daily time frame right now, and this is why this is important. The, I guess, prerequisite, if you will, for price to ultimately retrace into discount of that range. And if you actually did watch the introduction video, you would have seen how often price does actually gravitate down towards discount of a range after the formation of an imbalance in price in the opposing direction of your trend. Okay, so in this circumstance, we've had a bullish price run since May 6th. We do not have a bearish imbalance to the downside. If a bearish imbalance to the downside were to form, then my expectation would ultimately be that price will see discount of this run, which is right around 20,950, and even more specifically, maybe even this 20,727. Okay, checks 20,727. Where does that have any overlap? Okay, if you take a look at the weekly time frame, below that 950, which is discount, 727 is right smack in the middle of this weekly bullish imbalance that was created back in May 12th. Okay, so that could be a point of interest. But again, here's the thing, and this is something about trading that I think is really hard for some people to grasp. And and I say this, this used to be the same thing for me, right? I always wanted it to be, if this happens, I'm now, if it hits my level of resistance, it's going down, right? Well, there are some prerequisites that need to kind of be, or requirements in order for price to do what we want it to do. Okay. And something that happens in a very, very recurring theme inside the market is that when price ultimately does reject out of our resistance levels and heads lower, we can get an idea that price is likely going to go to discount of that range after the formation of a bearish imbalance. Okay, bullish price run, bearish imbalance would suggest ultimately price is going to go to discount. Okay, there have been multiple examples even more recently, right? Our most recent bearish price run. Okay, here's your bearish imbalance form, there's your drop down into discount of that range. Okay, we can kind of go through it, every one of these little peaks that we've had throughout time. First imbalance to the downside, here's your discount retracement, there's your run for highs to complete the Mando model. Okay, so it's something that happens quite frequently inside the marketplace. And that first bearish imbalance, what we're referring to here, that is something that would initiate the odd NAM model. One of my trading models, it's essentially the opposing side to a Mando model. In order to get that Mando model, right? In the Mando model, we're looking for a discount retracement into a bullish imbalance. In order for us, to kind of get that discount retracement into a bullish imbalance, it could also be a bearish imbalance. But for the most part, when you look at NASDAQ or SPY from a higher time frame, it's been bullish forever. It's a bullish market structure. Okay. But in this instance, right, in order for us to get that discount bullish imbalance, we need to form an imbalance to the downside to suggest price is going to go to 50%, right? Because here's the thing. You might say, oh, I don't care. I see a red candle, I'm taking it lows, right? And then you see something like this where price did move lower, but there was no imbalance. Nothing was suggesting 50% just yet. And then you see the range expansion. Okay. So until you see that bearish imbalance, odds are you're probably not going to see discount. And that is something that is necessary for me to ultimately use as kind of the compass for us moving forward. If no bearish imbalance forms, really nothing is suggesting we got to go down right now, right? Yeah, we ran into a higher time frame level, but we haven't really shown any urgency to reject off of it up to this point. Okay, right? And there's your weekly level again. We could very well inverse this. We could flip this bearish imbalance bullish and proceed higher. I mean, that's something that I really don't like. And the reason why I really don't like that is because it doesn't meet the criteria for any of my trading models, right? I like discounts. I like discounts because immediately off of a discount, your odds are much better for success, and your risk to reward is also on your side as well, right? Anytime you're buying a discounted imbalance, your risk is going to be less than half of the range, while your reward has the potential to be more than half of the range. That is the whole idea behind the Mando model, right? So, obviously not really the prettiest of spots. Again, if there were to be some sort of rejection for us to see this down here at 20,943 down to 20,553, this seems like a pretty decent area for it to happen. Is anything suggesting it's going to happen just yet? No. There's no daily imbalance. When a daily imbalance forms, I will, circle back, and then we could start looking for this. But until then, I am very skeptical. We could very well just continue grinding just a little bit higher to get to that all-time high prior to ultimately retracing following that sweep of liquidity. So does anybody have any questions about this or anything like that, what I just went over? But that's kind of the way I like to frame things, right? Because you can use these price reading principles, if you will, to ultimately you know
help you not only trade but also kind of foreshadow where market is likely to head. My thing really is, just because you can read price doesn't necessarily mean that it's a tradable environment for you, right? It's not always going to be tradable, especially if you're pretty strict with your quote unquote trading rules, right? If you do have like a legitimate set of rules, and you actually follow them, you'll agree with me that just because you have an idea of where price is likely to go doesn't necessarily mean that it's going to be a tradable opportunity. It really needs to meet some criteria and some of the requirements in order for me to kind of check those boxes to make moves off of. So anyways, that is what I have for the indices right there. So if anybody has any questions, of course, you can feel free to type them in to the chat. All right. So next, let's go. Let's see. Let's go into let's go into the long short for this week. Okay, so I was a little late here on the long short. Sorry, apologies, but the long short went up about an hour ago. We do this every week now. I think this is extremely helpful to get some practice in. But reading, repeatable setups. Okay, can we read these repeatable setups in hindsight? If you can't read them in hindsight, do you really think you're going to be able to read them before it happens? Are you really going to be able to anticipate price moving to where you want it to go, right? And that's the end goal for everybody who's looking to trade, right? That would ultimately be that end goal, is to get to a point where you can anticipate where price is going next. I see a lot of people talking about reacting. Try reacting for a month. It's not going to work out well for you. You're going to be caught holding bags. You're going to, oh man, it was a fake breakout. Why would you ever want to put yourself in that situation to be in a fake breakout, right? Doesn't sound so smart, right? But if you can accumulate something in discount and use smart money concepts in order to build a position, tends to work out better. In the 24-hour, the last candle will be considered a volume imbalance. Yeah, so I mean that's a decent eye, but here's the thing about this. Yeah, while you'd be correct, right? Let's zoom in. Okay, so right now this is actually what we're working with in terms of that first imbalance forming. Okay, we close price Friday here. Okay, and we open price here. Okay, so if we don't close tomorrow back at like 21,874 to essentially mitigate this bearish volume imbalance, okay, that would technically be the first formation of an imbalance to the downside, right? So these are a little funky. So let me just zoom in. This is actually, we've been talking about this in the group a little bit, and I'll bring it up here as well. But, you might say, like, what is that box? Like, where are you pulling that out of, right? So I'm just going to remove this for one quick second, just for optics, make it look a little bit more clear. But think about this, right? We talk about gap downs. Like, how do you actually identify that gap down? How are you mapping it properly so you know where the gap begins, where the gap ends, right? So just think about this. Each candle, right? I hope everybody knows how to read candlesticks. And if you don't, I'm sure, there's, you can ask Grok. I'm sure Grok will teach you, or some other AI bot. It's fairly simple. But on a green candle, right, the low of the actual body of that candle is going to indicate the open price, and the high is going to indicate the close price for that day, right? So price closed here, and we opened here. Okay, that would actually be the gap. Okay, it's not something that looks like this, right? Doesn't make any sense. What happened here, right? We gapped down from here, not here, right? So your daily volume imbalance would actually look something like that, okay? So just note that, despite this relatively strong move into, since we gapped down, we're still working on a bearish volume imbalance right now, okay? So, but yeah, that's a good eye. Yeah, absolutely. That with the closure of this candle, right, we still have 19 hours, 57 minutes left on it, but that would be a bearish volume imbalance. And again, also with the stream, it might be a little delayed. So if you have a follow-up question, it might be a little delayed, but apologies. It's just there's some sort of delay from when I say it to when it goes out to you guys. So just keep that in mind. But yeah, you're right on there. Yep. Okay, so let me just go back and do this. Whoops. Okay, keep that there. All right. So now let's go into the long short. Okay, this was something that I posted about an hour ago. I usually post them a little earlier to get more answers in, but I wasn't able to do so this weekend, so I posted it a little while ago, and we're going to go over it right now. Okay, so here it is. Here was the image that was posted. This is a Tesla 1 hour chart. Okay, I don't tell you what that is because then you could just look it up and then answer the question properly. But the first thing I like to kind of especially when I'm like talking to other people, or I guess like just going over process in general, the first thing I like to talk about is what sticks out right off the bat when you look at this chart. What is sticking out to you? Okay. And for me, and listen, everybody can be different here with what pops out to them first, right? And this is why when we talk about people crafting their own models inside of the group, I think this is really important because some things might stick out quicker than others to me, and then you might be onto something different. Okay. But really, to me, the first thing that sticks out to me is that we have relative equal lows resting there at 333.22. Okay. Now, with the relative equal lows, something that you just need to keep in mind is that this is going to be two pools of liquidity, right? And of course, you need to buy into the idea that ultimately the market is seeking liquidity. It's seeking money in order to act as gasoline for the vehicle, right? Without liquidity, without gasoline, this car doesn't move. Price action is going to be slow. The example I always bring up is take a look at a penny stock. Well, if you look at a penny stock, the term that everybody uses, illiquid, right? They don't move. And the reason for that is simply, to me, I don't believe that the necessary liquidity is currently on that chart in order to make that move that is necessary. Why do people get arrested for pumping and dumping penny stocks? Because they actually influence the price. The liquidity that they're bringing in from outside of the marketplace can actually influence the direction of price. Okay, whereas on something like Tesla, Nasdaq, any of these mega caps or even large caps, mid caps, you name it, it's not going to necessarily influence the price delivery. Right? When was the last time you ever heard of somebody pumping and dumping Tesla? It doesn't happen. Okay. But these relative equal lows, this is two pools of liquidity. Okay. Here would be your first, and here would be your second. Okay. The reason why there's two pools and not one is due to the fact that by us not taking out this candle's low right here, we are leaving behind this liquidity, right? Think about it. What is the only logical explanation for price to put its foot in the ground right here and make a move like this? There had to be buyers, right? I think everybody would agree on that, whether you use the concepts that I use or don't, right? Somebody had to be a buyer there, right? Somebody had to step in. And by them stepping in at that point, that is not engaging this liquidity. Okay. Right. I just want to show you. Here's a quick example at the reactions to liquidity. Okay. When you sweep liquidity, oftentimes you are going to get a pretty swift reaction to it. Okay. So that would just be one of the examples. So by leaving two behind, that is very sus to me. Okay. In addition to leaving two pools of liquidity behind, right? My idea is that the market is seeking liquidity. It needs this money. It needs money in general, right? It needs the gasoline to power this car in order to move. So the algorithm's job is to ultimately go and seek those orders. Okay. Now, here's the thing. After we ultimately made this move, it's important for us to just, take a quick look and say, all right, what's our current market structure here? Okay. What is the market structure? Well, we took out this low right here with this price run. Okay, fine. High, down to your low. Beautiful. Okay. So this would be our range. First imbalance would suggest here's your first imbalance, just a little volume imbalance. Volume imbalance, gap higher. When that first imbalance forms, circle back to the first thing that we talked about tonight, which was waiting for that first imbalance to form to suggest 50%. Here's your first imbalance. There's your 50%. Okay, just another example of that happening. Something that happens quite frequently. Okay, so with that being said, let's zoom in real quick here. With that being said, we now have a bearish price run. We took out this low with that price run. Price ultimately gravitates back towards 50% following the formation of the first imbalance to complete the odd NAM model. And now it's Mando time. Okay. Here's a bearish imbalance. And you might say, oof, this is sloppy. And I would agree with you. It is very sloppy. But now check this. Okay. We have a high, low, higher high, break down and through. our expectation is that the low of this sequence, high, low, higher, high, breakdown and through, the expectation is that the low of that sequence is going to act as a resistance level moving forward. That is called a bearish breaker. And bearish breakers tend to be the ultimate reversal sign. If you don't believe me, I have a video that's on YouTube, and I believe it's on Rumble as well. It's called The Most Powerful Setup in Trading, and that is a breaker. Okay, so here's what your breaker looks like. Large and disgusting, but worth noting. Okay, so you have a high down to your low, a discount retracement into not only a bearish imbalance, but also a bearish breaker. You have a flush down through lows, and that would be the completion of the Mando model. Okay, so that is Mando model number 1 complete. Okay, now we took out this low with what price run? From your high down to your, right? Let's just say you have it here. Did we form an imbalance to suggest 50%? Nope. No low is set. Bloop. Gone. Any imbalances? Nope, 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 nope. Here we go. Boom. Okay, here it comes. First imbalance forms. Check. Okay, bearish price run. We took out these lows with that price run. We did not see 50%. First imbalance forms. Price gets into that first imbalance that forms, runs to 50% of the range. Odd nam complete. And now we put ourselves in a pretty good situation. Okay, because now we are discounted, right, above that 50% in a bearish range. Why do we call that discount? The reason is because you are now getting it at cheaper than fair value. If 50% or equilibrium of this range is at 348, anything above that, you're going to be getting discounts for your shorts, okay? As long as you have a bearish imbalance coinciding with that, in this case would be a Showtime bearish imbalance because it is the final bearish imbalance inside of that bearish price run right here, okay? There it is, okay? Boom, beautiful, okay? So with this, price ultimately gravitates up towards a discounted bearish imbalance. You also have something called a mitigation block here. We'll talk about that another time. Okay. You have some confluence. You swept liquidity in the opposing direction of your overarching trend. And you got to the midpoint of this bearish hourly imbalance. You got a lot of confluence there. Okay. But here's what happens next. The answer to this week's long short would be bearish. There it is. And guess what this is, folks? This is the completion of a bearish Mando model. From your high down to your low, here is a discount retracement into a bearish imbalance. Here are those relative equal lows that we led off this little segment with. There's your flush down through those lows to ultimately complete the Mando model. Okay? So if you got it right, congrats. If not, time to hit the videos. Keep working at it, okay? But with these long shorts, of course, I'm not giving you any higher time frame context. I'm not trying to confuse you. So if you see a setup in the direction that you think it is, don't think I'm going to pull a rabbit out, one of those like Uno reverse cards and be like, nope, actually, I didn't tell you all the information that you needed to get this right. So, haha, I'm not going to do that. But this is just for practice purposes. I think this is going to help people get better at reading price. And, obviously just to amplify the efficacy of the Mando model and OddNAM in this case as well on a day-to-day basis. Okay. So that is this week's long short. So hopefully that was helpful, insightful, to anybody who is actually looking to get better at reading price. So if anybody has any questions about anything we went over right there, feel free to put it into the chat. I see. Damn, you just opened my eyes with that. Thanks. Yeah, the volume imbalance. Yep. It is. That is something that goes overlooked a lot. The gap is a little funky. So, yep. Just and also watch how it operates these next 2 days, right? And think about what it would look like if you didn't use the actual gap down candle versus just a little gap. You're going to notice, you're going to say, whoa, okay, now it makes sense. There it is right in front of me, right? So basically everything that I'm talking about, I really want it to be well known that everything that I say in here, it needs to be back tested. You have to prove it to yourself. You could take my word for it all you want. I would prefer if you back test it. Okay. I think you're going to be better if you can prove it to yourself that it works. Okay. You can listen to everybody all the time, but to me, it's not going to resonate as well until you could start doing it for yourself. So, anyways, that is this week's long or short. So I hope that was helpful to everybody. So before we get into some of these individual names that I want to take a look at, I would love it if everybody would smash the like button. Drop a comment. If you're new here, welcome. Let me know. If you got any questions, let me know what you think about the stream. I will take any any thoughts about the stream except for my opening intro. If you say, oh, the opening intro, the video's too small, I'm gonna just tell you to just leave. Okay. It's like, dude, I'm playing a video. I'm just giving you some free video just while you sit there and you just wait. If you want to wait around, great. Maybe you can pick up on some stuff. I saw somebody say, I saw this last week. I change it up every week. So that's not the truth. Kings is in the Discord. He probably heard that stream a while ago, but yeah, I change up the stream in there every week. So it's just bonus content if you want it. If you don't want it, it's all good. Don't sweat it. I'll be here right around 8:30. All right. Usually it's an hour. I just leave it open so people can come in. So that no one, while I'm halfway through with the stream, asked me to go back to the first thing that we talked about. Like, all right, you got time, you're here, let's make a little event out of this. All right. So anyways, let's get going. Let's go on to the next. So I'm going to take a look at some of the subscriber requests and some of the I actually don't think we have any conceptual things, which is good. So we'll just talk about some charts tonight. That's fine. All right. So let's see. I'm going to go through these and then we'll keep going. But yeah. Yep. Grayson, I will look at that just for you though. All right. We'll do that one next. All right. So let's just go through some of these big names first, and then we'll work our way. Okay. Because there's a lot of names that I'm seeing really popular on X. Oscr was one of them. We talked about that over a month ago. Hymns. I have a tweet on Hymns from multiple different runs. But yeah. My thing is really and really think about it. Anybody who you would say is like, oh, yo, that was a sick call. That was good. They're probably going out on a limb with that call, right? Because basically nobody wants things when they're discounted in discounted imbalances. Okay. That's just the sad truth of it. And that tends to be the best time. I'm going to just go to Hymns because, or should I go to Hymns? I don't know if I have the tweet loaded on my receipts one. Let me see. Let me just see if I have it. I don't mind going back to it. I'll just go to another random one. But if you ever wanted to see if did he ever do analysis on a name, just do @Mando trading with the $ and then the stock symbol. And a lot of the times, I don't post as many publicly anymore because I just noticed you kind of some people are just they're just little candle crackheads. They're just obsessed. All they care about is just getting answers. It's nah, you should probably just learn how to do this. I think that would probably be a good idea. Dang, I don't have this one. What else should I use as an example? This is probably my favorite one for the year, so I'll use this one. Oh no, I'm in the wrong charting thing. That's why. Whoops. Hold on, I'm coming back. Let me see. It's yeah, here we go. I'll see if I have Hymns, and then I'll just do ZS too, because ZS is pretty cool. Whoops. No, we got to get rid of this, buddy. All right. Close. Good. All right. Here. Oh, I have Tesla. Let's do Tesla first, and then I'll do the other two that I said. Okay. So here's the thing. Think about this, right? And I made the claim that, a lot of the time when people are way ahead and they're going crazy on something, right? They're probably well in advance of the actual move, right? So here's just an example. Nobody wanted Tesla in April of 2024. I had posted it in the group in June June 19th, 2024. So where's June 19th? So somewhere in here. So at about $180, I said Tesla 414, right? It's always crazy until it happens, folks. You got your discounted retracement into a bullish imbalance here, and then you got your run down through those highs at 414.50, okay? I had reiterated it here, October 27th. Tesla receives a price target of 414.50 from Mando Capital. Haha. Okay. And yeah, that happened next. But oftentimes the best calls come from when you don't nobody wants it. Oh man, I don't have hymns up here. Dang. All right. I have a bunch more, but let's see. Here's Zscaler, okay? This one I had posted January 11th, okay? So a yearly outlook that matches the setup of Tesla and NASDAQ from 2024. Is this a sleeper stock of 2025? Let's take a look. Again, it's Zscaler. Nobody cared about that tweet, but Zscaler is now from 183 up to $300, right? So nobody wanted it down here, but now people start talking about it when it's up here. This is just a tale as old as time. Here's net, right? Weekly and bullish imbalance filled. Ready Player One. Mando model completes at 116. Okay. Did anybody want this after it was down more than 50% of its highs? No way, right? No, we did. Okay. And then there she goes, right? So, I'm just using this as an example, and believe it or not, Net actually just completed another Mando model. Wow. Okay. So here would be your next. Okay. What was the price run to take out this high, right? Go through each one of these little fluctuations in price, and this low to your high, that's a Mando model completion right there. So this cannot be the low. This range was already established and completed. Let's go to the next one. Low up to your high. See, no 50%, no bearish imbalance was suggesting us going to 50%. Guess what? Now you have your range set properly. Now you have the discount retracement into this bullish imbalance right here. This is a bullish fair value gap. Hold on. See you later. Do you think anybody wanted this at 90? From 177 down to 90? It's down over 50% from its highs. This is what I'm saying. When you go out on a limb with these calls, right? It's because they're in advance, right? Looking for the breakouts is going to get you crushed. It's going to get you crushed. Just learn how to read price. It's beautiful. It truly is. Okay. And I think I have an updated post on net also from January of this year as well. So, but anyways, yeah, no. So just a couple examples of how, like, when nobody wants it, oftentimes that's the best time to buy it. Of course, you need to have some sort of, semblance of a setup behind it. But, everybody wants things when they're up here, and it's like, all right, it's a little dangerous, but anyways, all right. So let's go into some of the subscriber picks, and then we'll get out of here. All right. Nice. Yeah, I see that. I'm glad you're back. Hopefully it was a good trip. Yeah, and it's gonna get hot this week, so you went the right week. Yeah, definitely. Very nice. Yeah, played many of these. Good. Sweet, man. Yeah. So anyways, let's do it. Let's go into some of our individual names. So one that I don't necessarily see it here, but yeah, okay, great. Somebody just asked about Tesla, so I'll do Tesla. Yep. Sure. Um, yeah. So that was the long short that I used. That was just the long short question for this week. I didn't go over Tesla yet, but I will right now because I think it's worthy of looking at. Okay, so here's the thing about Tesla: we're totally in a sandwich. Okay, what do I mean by a sandwich? You have a bullish structure. You had your first imbalance to get you down into discount, and you did leave these ugly lows. Now I'm going to say this again. I said it last week. Sorry if you listen every week and you're tired of hearing this, but Tesla right now is really just a case study for me and the rest of the group. Okay. In after hours, right? Those Robinhood hours, Tesla did hit this mark, but it didn't do it in trading view window or time window. Okay. So it doesn't look like it swept. We're kind of just tracking this to see, like, okay, if it comes back down to that 212, now we know, like, that Robinhood, after hours is actually, like, valuable. If not, it's useless. Okay. Because we did get into a discounted bullish imbalance. Like, you could justify this going higher, but right now you see price getting sticky inside of right off the midpoint of this monthly imbalance. Okay. typically you will notice that when you have monthly imbalances, things don't get up and through in one shot. Okay. Just another example of this was Tesla from July of last year. Actually, we made a sweet run and then closed right by it and gapped down right back into that monthly imbalance to start the next month. Okay. And then we saw this bullish imbalance and then we started going up again. But, I'm just as a reference. Okay. So right now we are a little sticky inside of that monthly imbalance. Come on over to the weekly. Okay. We have a low up to your high. We got discounted. Not bad. We did run into that monthly level. Okay. And we swept liquidity in the process. Okay. Where we are currently is kind of important. Now, we did actually form. So, look, this is a gap, right? We gapped down the close of this candle to the open of this. Okay. And we mitigated that immediately, right? This would be something that if you were uber bullish on SPY going into this next week, this is what you'd want to see, an up close candle through that imbalance to flip it in a sense. Okay. We have a weekly imbalance above us at 335. This is showtime to me. This is going to be the most important level for Tesla moving forward. If you were to mitigate this bearish level overhead, and ultimately I do think price is going to get up into that, but if you mitigate this, then I think over 367 is pretty likely. Okay. And then you got a couple more imbalances to deal with following that. But I think that puts you in really good shape to start making progress back up through those highs. Now, the timetable for this, it could take a little bit of time, right? You could get into this last week, right? And let's say or maybe even see this and then go see this. Okay. But what I'm looking at from a NASDAQ perspective really is just form this to close out this month and then ultimately get into it, whether it's the beginning of the month, whenever it might be, but to get into this imbalance and take off from that point. That would be, I think, an ideal scenario for bulls moving forward. But this is really the pivot on Tesla for me. A rejection from this point, that could kind of, spell disaster. That you could see 270 from that point if that were to be the case. But that would be Tesla. Just one that, I know everybody watches and everything like that. I mean, I think this is going to be very valuable to us in the future, getting an idea if this actually matters or not, so that would be Tesla. All right. I'm just pulling up the other tabs, see if we got a couple other we want to run through here. Yeah, we do. Okay. Nvidia, sure thing. Let's look at Nvidia. Okay. Alrighty, so here's NVIDIA. Very similar to NASDAQ, you are in the process of creating a bullish imbalance here on the monthly time frame. If you'll remember about, 45 minutes ago when we were talking about NASDAQ and the fact that we didn't, form a downside imbalance to suggest 50%, to me, this is just a perfect example of what could happen if you do not form that imbalance, okay? We did not form an imbalance to the downside, so there is nothing suggesting that we got to go see discount just yet. We sweep liquidity in the opposing direction of the overarching trend while hanging out inside of this bullish imbalance, and we just turtle soup and rip, okay? So from my perspective, forming this would be excellent, right? As long as you don't see 115 over the next 7 days, you're in pretty good shape here on Nvidia. But to me, all-time highs look pretty likely moving forward here, okay? Go to the weekly. Very similarly, we swept liquidity last week and we actually maintained above it, believe it or not, okay? Very similar to NASDAQ here too. It's got an imbalance at 129. If we were to go see NASDAQ this imbalance at 29.43, it would be likely that Nvidia sees that 129. But there's really no imbalance in the mix right now. So last week's close is pretty bullish, actually, believe it or not. So yeah, that's just a couple thoughts on Nvidia there. I don't know if you guys can pick up on this, but I don't like trading stuff that's up here. I like going out on a limb and taking longs like when they're down here. And if I'm wrong, it's a pretty quick. I'll realize that I'm wrong pretty quickly. But trading up here is just a little. You just throw a couple extra variables into the mix, right? Because the draw can be 153, but do we see a little bit of a retracement before 153, or do we head there in a straight shot, right? I don't think you really have all the answers available to you at this exact moment. I'm not sure if NVIDIA created a daily imbalance. Let's see. No, it didn't. I mean, nothing's really suggesting lower at this point either. So Yeah, no, I really don't like trading up here. I like trading on discounts. So anyways, let's keep pushing. Let's go to AMD because AMD has been amazing. This is one that I was way too early on AMD. I'll be the first to admit that. I was way too early on this, but um the thing about AMD was I really didn't have a problem just kind of accumulating while we were deeply discounted. Okay, so I had drawn this out a while ago, and the issue was just kind of the time scale in which it was occurring, right? So actually, we really should look at this. I'll show you guys this, and I'll show you the quarterly as well because it all kind of comes together. Okay, so we got into that quarterly imbalance here. Now look at the bodies telling you the story. These wicks are always going to give you the heart attack. The body is telling you the story. Okay. Body perfectly respects this bullish breaker here on the quarterly time frame. Your wick, obviously, you did wick and fill that last imbalance on the monthly. So AMD, while it did take a long time to kind of put its foot in the ground and start progressing, to me, I think 227.30 is going to happen. It's just a matter of when. Really, it's going to take time. It's a quarterly setup. It's going to take some time, but I really like to look at this one moving forward. I'm glad I was able to. Looking back on it, it was a little sweaty because it's like, oh God, am I really just going to get stopped out here on like a 30 point, $30 per share loss? And it met the criteria. It never blew up the setup that I traded it off of, so it was all good. But yeah, it took a lot of time. That's what, this is weeks. So 1, 2, 3, 4, 5, 6. It took 7 weeks off that low to and even like a little bit of a quote unquote fake breakout. Here's your fake breakout, guys. Just for reference, if anybody was curious. Okay, that is a bearish weekly fair value gap right there. But anyways, that was really annoying, but it's really making nice progress right now, and now it's just a matter of time, in my humble opinion. Okay, so odd nam has been completed. First imbalance, we tagged 50%. We got into the bearish imbalance, and we swept liquidity in the opposing direction of your overarching trend. So if there were to be a retracement, this obviously would be a time for it to happen, but over the long haul, this is a shares position for me. I don't really care too much about what happens on a day-to-day as long as the setup itself doesn't get blown up. So that would be AMD. All right, let's go to our next one. This one will be quick. ARM. Okay, so let me actually pull this up. So ARM last year absolutely crushed it. Earlier this year, it gave me a little bit of a haircut, but I'm going to win this. So I'm going to win this time. Here it is. Okay, so ARM. Okay, here would be the last time I had posted about it. Okay, earnings this week. The deeper into discount, the more I like it. Mando model completes at 164. Price was at $95. Why 164, Mando? Because that's where the Mando model completes, man. Come on. Come on. All right, so that was the first time through. Now I like it equally as much. I mean, you come over to the quarterly time frame and you're looking at a where is it? Here. Look at that. Perfect into the quarterly imbalance. No imbalance overhead, Mando model completes here at 188.75. I mean, this one looks like an absolute beauty. So, like I said earlier this year, it did get me. It did spend a little more time than I wanted it to in here, very similar to AMD. And I think I tried to catch the first bounce out of it when it needed just a tad deeper into the quarterly. So, but ARM, yeah, this one's amazing. So gonna be loving on this one for a little bit. Okay. Next one is Oscr. All right, Oscr. Very nice. So this is another one. I'm pretty sure Oscr took out that 23.79 in those overnight hours. I might have to, I don't know if I can zoom in here and it'll show me. But if it did, then I would, yeah. So, okay, 22.78. So not quite yet, but you guys might, you might find this actually familiar, eh? Low up to your high, you have a discount retracement into a discounted bullish imbalance. There is your run for highs to complete the Mando model. This is one that's been on stream for over a month now. We're kind of just revisiting it throughout the process. So This is really awesome. There was one mark that I wanted to see happen, and it didn't happen. It is what it is. It happens. But yeah, this one was a really nice move on Oscr. And there is a mark on here. I think it's like $23 that ultimately I think we could see 23.79. But here's the thing. Now with this range expansion, you actually are dealing with a pretty big run. So retracements could be relatively large, right? Discount of this is at 18.29. If we were to retrace, nothing suggesting that we are just yet. But if we were, 18.29 would be the next discount opportunity. So, but that is Oscr. All right, here is Hims. We'll do this one quick, and then we'll do Robinhood, and then I'll do the ones that Grayson had asked for. Hims, where's Hims going? All right, I think it's going there. Let's see. All right, come on over to the monthly. Okay. From your monthly perspective, low up to your high, you have a discount retracement into a bullish imbalance to the tick. And now you're run through highs. So 72.98 gets the job done. And we are also in the process of completing or creating a bullish monthly imbalance here on Hims. All right. There she blows. Okay. Bullish imbalance, price respecting, no bearish imbalance suggesting lower. Now you got relative equal highs up there. Yes, I am the algorithm. 8 points away, and we'll complete this one. Okay, and this one I loved because I've tweeted about this one about 75 times. Low up to your high, discount retracement, bullish imbalance, bullish breaker, run for highs. Low up to your high, discount retracement, bullish imbalance, run for highs, Mando model complete. Low up to your high, discount retracement, bullish imbalance, run for highs, Mando model as complete. Oh, not that. Whoops. Okay. Low, whoops, up to your high, discount retracement into a bullish imbalance. What happens next, folks? All right, so that is Hims. Last one is Hood, and then I'll do a couple more of the requests from you guys in the chat. Okay, so here's quarterly on Robinhood. Price retraced into the quarterly imbalance, and see you later. Okay. Robinhood graduates into a real company at $85. We are close, folks. Okay, so there's no imbalance in discount of that range. Nothing suggesting anything going lower. Swiss cheese up to 85. All right, so that is Robinhood as well. Just another one we've been talking about over the last couple of weeks. Really, just we've been on a run. All right, we've been on a really nice run. Let's keep it up. Okay, but I will say that I really don't like the setup on Nasdaq or really any big tech right now. It's kind of trash. We're all like basically at the highs of a range, so not all that ideal. Okay, so yes, all right. Let's look at UMAC. All right, let's look at UMAC. All right, let's see. What is this? Like a karate dojo or something? No, unusual machines. Okay. All right. Ooh, okay. So at some point historically, we've taken a look at this one. Here's the thing about UMAC, okay? While it looks pretty good, you do have a monthly imbalance here, bearish, okay? To the tick, rejecting off of it thus far, and you left a bunch of relative equal lows behind. So at some point or another, my expectation is that it comes here. But do we need to go see 445 first? That would be the only question that I would have, okay? What's going to change my mind on that? Well, I'm going to need to see some sort of market structure shift, really, in order for me to really, truly believe that, okay? And your answer is going to come from right here, in my humble opinion, okay? From 770 down to 523, you have a weekly bullish fair value gap. If you were going to be respecting bullish order flow, right, this is a fair value gap and also a bullish breaker, okay? So if you respect bullish order flow here, then the expectation is that you are going to start making progress up towards those highs. But if you do not respect bullish order flow, then I think these, so this is really showtime from a bullish perspective right here. Last chance for the bulls. Okay. That would be UMAC. All right, let's see. So that's Grayson. He's in the group. That's why I did it. Mara. Sure. Let's look at Mara. All right. Let's see. Okay, so Mara had a discounted monthly imbalance that we had caught. Okay, we have a bullish monthly volume imbalance right there. Okay, so yeah, realistically, this I would prefer this to catch. Okay, catch from here and start to push higher. We have relative equal highs here. Where did we reject? Monthly bearish volume imbalance. See, everything is makes sense. It's not like just imaginary. The problem with Mara is that every time it's run, they've had offerings to dilute the share structure, and this has been like over a year in the making, almost 2 years really inside of this range. So yeah, I mean, nothing has changed yet again inside of the overarching picture. Just slow poke. Okay, so that is you're very welcome there, sir. That's Mara. Okay, do the deal. Let's be friends. um I'm only gonna do this one time. Okay, I'm just doing it once. GameStop, sure, let's do it. I don't hate GameStop at all, but I do think GameStop's going to go see these relative equals. Nah, I'm messing with you. Yeah, I'm not really a fan of GameStop, and I'm just going to explain to you why. Again, it's not that this setup isn't excellent, because to me, from a higher time frame perspective, this is a very good setup. But the problem is, every time that we've taken liquidity, what has happened? I want you to go back and check. Go back and check. Every single time that we've swept liquidity, I've taken out a previous month's high or something like that. Check the dates of the offerings. Okay. Check the date of the offerings. Every time we sweep liquidity, we do that. Okay. So to me, looking at it from this perspective, we swept 34. We could not claim 34. Go to my profile at Mando Trading $GME. You will see me call for the price run to 34.40, and at that point, you will see me then type in immediately after we took 34.40. Will we see continuation? I'm looking for an imbalance through buy side liquidity to offer me some insight that we will get that continuation move. Did we get an imbalance through buy side? No, we didn't. Okay. We have a ton of relative equal lows here. I would not be shocked to see 1873 on GME. If that were to happen, does that blow up the whole setup? Does that ruin everything? No, it doesn't. Okay. But GameStop really, to me, is just another excellent example of something like Mara, where every time you have a run, you dilute it. It's all we're doing is just adding more time to the, what I would call the inevitable. Like, I really think GME is going to go ballistic. I do, but I don't think it's going to happen anytime soon. Uh, Actually, I shouldn't say that. I shouldn't. I shouldn't even say that, because I don't know. But I by them diluting every time, I don't think that's good. I think that is just leaving way too. You're just basically taking more and more time for it to kind of complete and take care of business. So if I had to look at this, 1873 beyond 1873, I think we look good still. Nothing's changed. But just think about this. This is monthly candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months. Just stuck. It's because they keep diluting the damn shares. When companies do this, that's my new rule. If a company starts doing that I'm holding, I'm getting out. I'm not waiting. Doesn't mean that I don't think this can go up. It just means that I don't want to wait. Right? So at this 1873, then I would say, okay, we swept liquidity. Now we're talking. But that's just from a way monthly higher time frame perspective. So yeah. I don't know what that means. Caution volatility now. But yeah. So let me just check. You guys got me checking all over. When you say a daily imbalance for Nvidia, do you mean a bearish daily fair value gap for price to go lower? Yes. Yep. That would be the odd NAM model, right? If an imbalance to the downside inside of a bullish run does not happen, really nothing is suggesting it's got to go see discount. So yeah, I think that's gonna be it. All right. So I didn't do this. I should have done this way earlier. Let's just look at economic data for this week. Okay, so let's go here. Let's see. All right. So this week we have PMI 9:45 on Monday. Okay, so that's tomorrow. Good. Powell testifying Tuesday at 10. Okay. Powell testifying again on Wednesday at 10. GDP and unemployment on Thursday, and PCE on Friday. So we have red folder all week. Okay. So I think that in confluence with what's going on in the Middle East, I think there will definitely be volatility this week. Maybe we'll actually start to move. That would be cool. What a concept. All right. So for anybody in Galaxy, this is what I got for this week. So tomorrow night, we will do a live EDU session. Tuesday, likely Tuesday night an EDU session because I made a prior engagement. So Tuesday, I'm not going to be able to do live trading. We'll do live trading this week, Wednesday, Thursday, Friday. Okay. First Friday live trading in a really long time, but we will do that. But that's kind of just a and Tuesday night, I'm gonna leave. I might just leave it up to you guys. Actually, I might say, if you guys would prefer Thursday over Tuesday, that's fine. I like the Monday slot. I think the Monday's good because everybody kind of gets back into the mix with looking at markets on Monday. We talk about some stuff, and then you kind of go throughout the week. If you'd want it on Thursday instead of Tuesday, we'll talk about it. But thanks, man. I think something will happen soon in 1873. It's a good call. Yeah, it's just kind of sticking out like a sore thumb. That's the only thing from the monthly, especially because after we swept that monthly buy side liquidity there. Yeah. Powell getting fired by Friday at 10. Yeah, I don't know about that. I don't know. Honestly, I'm done. I'm done caring about it. It's just so frustrating, all of that. So anyways, I got to do this. Okay, let me just do this really quickly. Okay, so still haven't tried 1775 coffee. Now's your shot. The 1775 starter kit just dropped, only 1,000 units. You're getting the bold dark roast that hits harder than a CNN fact check, the smooth medium roast, and the Vitality mushroom coffee for clean energy and laser focus. No crash. All single origin, small batch, toxin free, and mold free. Plus, you're also getting a gold spoon clip because freedom isn't scooped with plastic, a frother strong enough to stir up your coffee and your mother in law's political opinions, and a black 1775 tumbler that says, I don't take life advice or caffeine from a woke sea witch. $170 worth of coffee and gear, yours for $99. This is the one for the ones who've been watching 1775 blow up on Rumble, wondering if it's actually worth it. Spoiler, it is. Ask Seeker. Seeker loves 1775 coffee. Go to 1775coffee.com/studio and grab your starter kit before they're gone. Bold beans, clean fuel, and a morning routine that stands for something just like Rumble does. Start your day with coffee that actually backs what you believe. Yeah, the last I heard, Seeker was like snorting the coffee. I don't know why. He's like really into it. Yeah, crash on the 29th for all markets. Yeah, for sure, man. Yes. Oh boy. All right. Okay, that's my cue to get out of here. So I'll catch everybody throughout the week. I'm gonna try and be a little bit more active on Twitter. It's just been a little boring, so I haven't been doing too much, but I will be a little bit more active on Twitter moving forward here. But yeah, so good luck this week. I hope everything that we talked about here was insightful. And please stop annoying me about the intro. I'm just going to do elevator music if you guys don't like the video in the beginning. All right. It's driving me absolutely nuts. All right. That's all I got. I will talk to everybody next time. Peace. When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon.